Well, that's a question that I've been asked quite a bit over 12 years. It often begins with, have you ever sold it or will you sell? And you know what? I can no longer say I've never sold an ounce because, guy on my site, Scottsdale Mint makes little 1 ounce rounds commemorative for my site, and a guy couldn't get his hands on any, so I sold him 20 of mine. So I've sold silver now before. But usually it's like, well, what are you going to do? Why are you holding it? Well, why did you buy it in the first place? And why would you ever sell it? The simplest answer is that gold as money and sound money for millennia is kind of your lifeboat. It gets you from point A to point B in the storm because it retains its value. Fiat currency, or going back to the Roman times, even coinage, just becomes depreciating, devalued over time, where they're shaving the edges off the coins to make more coins back in the late Roman Empire, that sort of thing. And obviously people have seen, the charge of the purchasing power of the dollar since the creation of the Federal Reserve, and all that kind of stuff. Gold is your ship. It allows you to convert your accumulated net worth, since it's, not really fungible to the extreme that you can use it to buy anything with it, 1 for 1, like a gram of gold or something. But it's a way to protect your accumulated net worth, your financial net worth, as we move from one system to the next. Because invariably, the way this has always worked out, you start out like we did after Bretton Woods with a sound money system of a gold-backed US dollar. And then you end up over here on the other side of the pendulum with completely free, unbacked, nothingness being printed to infinity. And then the economy, the world, your country, whatever, loses confidence in the future value of that, Weimar Republic kind of stuff. And then the only way you can reestablish confidence is to swing all the way back over to the other side and restart over with sound money. So that's why gold is your ship to navigate, this pendulum swing. Silver, on the other hand, is kind of a two-pronged thing. It's the pricing system at this point where we trade futures contracts to determine the price, and the futures contract, can fluctuate 5 or 6% in a day like they did, earlier this week. I recognize silver more as an undervalued asset play. It additionally is something that if you've got physical silver on hand and there's ever a, shut down the ATM kind of scenario, I think you can barter with it. You could take a roll of Silver Eagles and exchange it for a side of beef, or something like that. There's a more fungible value to silver than there is to gold. So in simplest terms, gold protects your well-being and silver protects your ability to buy stuff. Besides being what I still think is an extraordinary capital gain opportunity. I mean, in the East, China, India, whatever, they've had periods, recent periods of great financial and currency upheaval, right? And so you learn from an early age of what really is money. It's not just dollar bills or, what shows up on your bank or brokerage statement. It's, tangible assets. So it's kind of cultural. Two, I think, and this gets to something I've discussed a lot over the years, is kind of a recency bias in a sense, or a normalcy bias, in that people in the West, or specifically, here in the US where I live, you can't imagine a world where the dollar isn't the reserve currency, because it's been that way since 1945. Yeah. And who's even left alive, really? I mean, my dad died a couple of years ago. He was born in 1929, but he didn't really even, was he paying attention at 16 when, Right. So there's a real, this gets that normalcy, recency bias. It's really hard to think of something that's never occurred before, or it's really hard to imagine a world where tomorrow is different from yesterday. Yeah. Because this is just the way it's always been. And so I've always invested all my dollars. I've always kept them all in the bank. I've always kept it in dollars. My personal currency reserves, let's put it that way, are in dollars. I get paid in dollars. I keep it in dollars, and everything that's dollar denominated. But you look around the world now, and all these central banks outside of the U.S. are taking their own sovereign, if you will, currency, gold, dollar reserves, and they're buying gold. I mean, it's more central bank demand for gold than any, that we've seen in 50 years.
Yeah.
Well, all they're doing is basically what I've been doing. They're taking, they do international trade. They get dollars, as the trading vehicle. They stuck with a pile of them, and you can put them in treasuries or whatever, or, you just keep in dollars. Eventually you swap those out for something more tangible, gold, and they're not doing that all of their entire balance sheet that way, which is why as an investor, I don't have every dollar of mine in gold either. But to get to the crux of your question, I think that's the thing. I just don't know if, and it's not just your contemporaries, it's mine too. People just don't think of it. They're not educated enough to think about history and economic history to understand the role gold has played in the past. And so they just don't even think about it because they're kind of caught in today, and there's a misunderstanding. There's kind of a disconnect for a lot of people too about what a dollar really is. And at the end, I guess the way I've always looked at it and try to get people to think of it is really more like an insurance in a way.
Mm-hmm. Yeah.
Yeah. Because again, you don't insure your house against burning it down and then hope the damn thing burns down unless, you're in the mafia or something, right?
Yes.
You don't insure your car against a car accident and then go out and purposely drive it into a tree, right? No. It's just there in case all hell breaks loose so that then you can kind of go, do other things. It's like I mentioned that part of my career where I worked for insurance companies and mutual fund companies. And I was a big advocate of annuities back then, especially for older people that can't really take risks, because these annuities would always come with like a rider that would protect you against, losing all your money or massive losses at a time you can't get it. And that rider acted as like guardrails or insurance to give you the courage to go ahead and invest. Think of like 2009 when, the S&P was at 700. Nobody wanted to touch it, right?
Yeah.
But if you were willing to pay an extra 1% in fees for, in some kind of insurance, on how that would do ultimately, then you go ahead and pedal the metal, and then the S&P goes to 4,000.
Yeah.
And so owning gold in particular is kind of like that. The last thing you're going to be worried about is the street name security, right? You can be worried about eating, right? Staying warm. Okay. So as I relate this back to gold, you don't buy gold and then sit back and go, yes, now I want the world to end.
Right.
Right.
Yeah.
Unless you're, psychopath, because you don't know what that's going to be like. I know there are changes that are coming. I know monetary history tells me eventually that pendulum's going to swing back over here, and I want to take steps. You prepare for the worst and hope for the best kind of thing. But I don't want to take everything I own and buy gold and then, await for total financial destruction in the hope I'm going to make some kind of profit.